Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FXPesa. So this morning we'll be talking about the top market events in the markets with key focus on some technical analysis on the price of gold. We'll also be looking at SP500, Nasdaq, Dow Jones Industrial Average. And at the same time, we'll be looking at the what's currently happening with Bitcoin. I know it's a big topic in the markets right now. But before that, I would like to highlight something for you guys. So let's jump right into it. And of course, we always start with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence and practice proper risk management. So let's jump right into it. So from what you can see on the chart here, this is one seriously big rally currently happening in Bitcoin, trading against the US dollar, having hit a high new altar Bitcoin. So this is something that we discussed since the beginning of the month. We were able to identify the breakout here, the pullback or retest of this trend line, and then the eventual breakout that has continued to push through last week and into this week. And now we are looking at potentially the price hitting $90,000 per Bitcoin and potentially extending to $100,000. So this is something we have discussed before. We have seen the potential projection of price extending the rally to $100,000. So I think the bull market is in. So we expect even further bullish momentum as more market participants try to FOMO in and take advantage of the strong rally. So outside of that, I think we can go back and now try to look at something else. So let's check one seriously funny headline that I've seen this morning. And this is on Yahoo Finance. So SP500 seen reaching $10,000 per share by end of decade, spurred by animal spirits. Don't know what animal spirits they are talking about, but so far we have seen quite a strong rally in the SP500. So the SP500 surged to record highs since Donald Trump won the 2024 presidential election, is showing no signs of stopping. And Wall Street strategists have been quick to update their outlooks on where stocks may be headed next. So on Monday, Yadeni research president Ed Yadeni wrote in a note to clients that he expects the SP500 to hit $6,100 per share by the end of the year, and that's about 2% above the current levels. Yadeni sees the index reaching 7,000 by end of next year, 8,000 2026, and 10,000 by the end of the decade. Previously, Yadeni told Yahoo Finance he has seen the SP500 hitting 8,000 by the end of the decade. So it's basically an adjustment from 8,000 to 10,000. So we're just seeing more pro-business administration coming in that undoubtedly will cut taxes. So Yadeni told Yahoo Finance, not only for corporations but also for individuals. So lots of various kinds of tax cuts have been discussed, and in addition to that, a lot of deregulation. In his note, Yadeni wrote, the market is showing early signs of animal spirits coming into play. So we should be looking at some technical analysis on the SP500 later in the presentation. So expect that along today's event. And of course, if you have any questions, feel free to type that in the live comment section. So what's up on the calendar today? Early this morning at 10 a.m., we had, forgive my throat. We had data coming in from the Eurozone for German CPI, which came in at 0.4% increase, same as the forecast and same as the previous month, so nothing more of a change. Then we had the jobs data from the UK, claimant count change. This is the number of people filing for unemployment claims, was 26.7K, which was lower than the expected 30.5K, meaning that the job market is improving, and it was much higher than the previous reading of 10.1K. Then we had the average earnings index, So we saw wage growth basically increasing by 4.3%. This is way higher than the inflation rate in the UK, meaning that net income or real income is increasing. So the forecast was 3.9% and the previous reading was 3.9%, meaning that we are seeing much stronger wage growth. Unemployment rate worsened from 4.0% all the way up to 4.3%. So these are big alarm. When unemployment rate is rising, it can be a big challenge for any economy. And in this case, we should be expecting a very strong response from the Bank of England, which would consider accelerating the rate cuts that it has been implementing. So going forward for the rest of the day, we have the German ZEW Economic Sentiment Survey at 1 p.m. So in this case, we are expecting an improvement to 13.2, up from 13.1. We will be getting the ZEW Economic Sentiment Survey for the entire Eurozone. In this case, an expectation of an improvement to 20.5, up from 20.1. And then towards the end of the day, as we mentioned yesterday, we'll be getting quite a number of FOMC member speeches, beginning with Waller at 6 p.m., then Bakin and Kashkari at 6:15 and 10 p.m. consecutively. So clearly, these meetings by FOMC members will be the key theme of the market, besides the official CPI report, which will be the top event of the week. So if you observe, we'll be having quite a large number of FOMC members speaking. So if we do a filter on the week, and in this case, we just select the US, then you can literally count the number of FOMC speeches, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and then 12. Fed share makes it 13, 14, 15, and 16. So we are actually expecting 16 speeches from FOMC members. So by the end of this week, we should have a pretty clear view of the next vote from these FOMC members, whether we'll be voting for further rate cuts into the US monetary policy or whether they are in preference of holding rates at the current level. So this week might be an observation week on monetary policy, trying to understand what the Fed members think. But then in terms of the movement of the dollar, we have seen quite a strong rally in the dollar index, and we could be seeing an extension or a reversal of the same based on the outcome of the CPI. So remember, if we see higher than expected inflation, then that will basically likely push the Fed into holding rates at the current levels. But then if inflation remains at 2.4% or below, then in that case, the Fed might continue cutting rates, and that would be weakening the dollar. So a higher than expected inflation report tomorrow will likely mean that the dollar remains stronger in the markets. So that being said, it's not a very busy day in the markets today. That is from the economic calendar. So we jump straight into some technical analysis. So checking on the comment section. Lewis Mutembei, thank you for joining. Good morning, Ronald Hillary. Noniza Jack, good morning. Paul Carey, Stephen Gugi, Wangari Patrick, Tapsked. Thank you guys for joining. Question on most promising pair today and this week. We'll be checking on that. Met Mboni, thank you for joining and good morning. Robert Kavale, good morning. So let's do some technical analysis and try to understand where the markets might be headed next and the prevailing market patterns. So of course, I'll be starting with the dollar index. Clearly, you can see the Trump trade happening last week. Towards the end of the week, there was a pullback, and then the market started recovering. And now we are looking at 105.7 for the dollar index, and this is quite a significant rally. So this has been a very strong bounce for the last 6 weeks, from a low of around 99.85 and a high of 105.7. So we can clearly see that the dollar index has gained by 5.89%. So in such a moment, when the dollar is so strong, you see other currencies are taking the brunt of it. Of course, yesterday we speculated that the euro will potentially break this support And the idea was to go for short selling positions once the market breaks below this area here. And this played out nicely. And today we are seeing an extension of the same. So from the daily time frame, remember our target was 1.06116. So from the 1 hour time frame, you can see that there's still more room for downside momentum. So in this case, we're expecting the price to at least reach 1.06116. So for those who are joining this session for the first time, you should know that it's a sequence that happens from Monday to Friday at exactly 11 a.m. So some of the setups we discussed yesterday are also available yesterday's session in as a continuation of what's happening today. So pound USD, we expected the market to drop and at least get to this particular trend line, and we were observing to see if there's signs of a bounce. So this idea did not play out. So what we got yesterday was a nice drop since the morning session, where the market actually got to target. But then this morning we are seeing an acceleration down lower, which indicates a further strengthening of the dollar, which implies that we could be seeing the market now extending the bearish momentum all the way down after breaking this particular lower trend line. So now the idea is that the pound continues weakening to the dollar to around 1.26759, and this is along the lines of the previous support. So if I was to zoom out, you notice this was the previous low. So we expect the market to now drop to the previous low around 1.26759. So pound yen, we expected the market to continue pushing the rally, but the resistance was too strong. So we saw the market changing direction. And it's the same thing happening with the dollar against the yen, though the pullback on the dollar yen was much shorter. So in this case, we are seeing the market accelerating further back downwards, and we are about to retest a key level support. So from the 15 minutes chart, this is the key level to observe, the area that actively served as support on Friday. So potentially, the market retesting this area here, and then we observe to see if buyers will be coming in. If we see buyers entering, then there's that good chance that the market would bounce from here and then extend the rally back upwards. However, this hasn't happened yet, so it's a wait and see kind of scenario, not the best setup as of now. So AUD-USD, we are seeing further extension of the bearish momentum, and now it seems more likely that the market is going to break the previous support area here. And if this happens, then we are likely to head into the previous low. So potentially an extension of the bearish momentum down to 0.65166. So as for the dollar yen, we are seeing a very strong bounce. So yesterday, we projected that this momentum would continue. Of course, the market struggled at the previous high. So we had identified this area here as a potential area where the market would struggle. It played out as expected, and now the market is about to breach that area and push for the next level, which is the previous high around 154.716. So the Nikkei 25 index is still struggling to get to the target here. So we expected some further extension of the momentum. So the area we got as yesterday's high was more around this area here. So market was unable to breach these areas here. So got a pullback earlier this morning, but now we are seeing the market bouncing quite strongly, which means that the play is still on, and the market could likely retest this area again. So as for gold, we projected that we would see some further downside momentum. So during yesterday's session, gold's price was trading around here, and we expected a drop to this area. So after we got to this area, there was a clean break, and today an extension of the same, which indicates a likely bearish momentum. So now the market is testing a key level that we had identified, and this is 2605 price level. So from the 1 hour chart, you can see that the market is struggling to move further below that area. So from the daily time frame, it seems like a panic sell if you observe the size of the candlesticks right from the top here. And we can say right from the top we got here, gold has been able to drop by about 7%. So 7% is not easy for a market that had gone up about 35% on the year. So in this case, it seems like there is some form of panic selling, and this is usually the opportunities to be buying gold. But then you don't catch a falling knife. In this case, we remain patient until we see evidence of buyers coming right back into the gold market. So the next likely target is not very far off. It was a previous high. So could be seeing an extension of the bearish momentum to around 2586. So 2586 is not that far off. So if you're trading on a smaller time frame, then potential extension of this bearish momentum could just drop to 2586. And then from there, we observe, we keep looking for signs of bullish entry. Since after this big sell-off, you expect the market to bounce strongly. So we haven't seen that evidence of buyers coming in, which means that the prevailing direction is the bearish momentum. So Brentwell had a moment of reckoning after breaking this previous support. So we were projecting that the market would bounce off this area and move higher. So we were wrong. Market eventually broke, and after making the breakout, you can see the sharp direction downwards. And today we are seeing some form of signs as if the market is looking to rebound and move higher. But then, if you really look at this chart, then you understand that it's more likely that the market is entering some form of consolidation. So we will be observing this area here to see if the consolidation breaks towards the upper side or the lower side. But that hasn't happened yet. So we remain patient and observe until we have a clear direction on Brentwell direction. So as for the topic of the day, which is the technical analysis on the Nasdaq, the Dow Jones Index, and the US 500. After we saw Trump winning the US presidential election, we had these strong rally where the market crossed at an all-time high, and then it was extended the following day. But then since that extension, what we are seeing here is more of a sideways momentum in the market. So we can say that since Friday last week, Monday, which is yesterday and today, this market has literally just been moving sideways. So the overall market direction has been more of a sideways momentum. And this basically means one thing, that at some point we'll be seeing some form of breakout. So work with yesterday's high and yesterday's low as well as Friday's low will determine the lower side. And then we remain patient and wait for the eventual breakout. So it's more likely that we'll be seeing a breakout within the week, and that will be a basis of our big momentum trade after this 3-day consolidation. So it's more likely that once we get a breakout, that the market will be making a big move. And in this case, if you check the previous high was around here. So in case the breakout is on the lower side, it's a clean drop to 20,650 for the Nasdaq. And if it breaks towards the upper side, then there is no candlesticks on the left. So potentially an extension or into a new leg. It could be similar with what we saw here. This was quite a big move. So notice that this was about 6% rally. So we could be seeing 1 or 2% rally if the market breaks towards the upper side. So we continue observing this range and trade the eventual breakout. So as for the Dow Jones, yesterday we formed another all-time high. So from the daily time frame, this is how it looks like. So a very strong rally since Trump winning the elections. So this was about 6.44%. And since we got to that high, notice how the market has been pulling down and the volume towards the downside is really going down. So we are not having much of a volume here. So you can see that the market is turning into this sideways momentum. So even on a very low time frame, the 5 minutes time frame, you can see that nothing much is happening on this chart. So of course, we know that this will not remain forever. Eventually, the market will make a clean break, most likely towards the upper side. So remember, a lot of investors are betting on the stock market remaining strong. And if that plays out and we have a breakout, then it will be time to go for a buy trade and target the previous high of 44,496. So we remain patient and observe for that potential breakout around here. So the Russell 2000 is also consolidating. So after forming a new all-time high yesterday, you can already see what's happening in this chart. So some form of serious consolidation is playing out here. So between this high and today's high, and of course yesterday's lows compared to today's, we are looking at a market that is potentially following this path. So it's more of a triangle kind of formation. You can already see this playing out. So eventually we are going to have that breakout happening. If it's to the upper side, we could be seeing some acceleration of the price higher. And of course, we cannot discount the market going for a drop. So if it happens to go for a drop, then we should be looking at potentially the lowest prices that we saw on Friday. So for the SP500, very strong rally since Trump won the elections. So on the 15-minute chart, we are already seeing some form of consolidation. So these are usually the best points to be analyzing the market and waiting for an opportunity to appear. So of course, here we seem to be having an upper trend line and a lower trend line here. And eventually the market will get out of this consolidation, make a breakout, then a strong rally or drop. So in this case, now we work with the all-time high. If the market breaks towards the upper side, we target the previous high. And of course, if it happens to be in the opposite direction, then we don't expect much of a sell-off. So perhaps we work within the limits of the lowest price that we saw on Friday, so around 59.60. However, the market is overall bullish. So if we happen to see a drop, the idea is to be looking for lower prices to buy the indices. So potentially buying the SP500, Russell 2000, the Dow Jones, and the Nasdaq 100 index might be the praise for the day, but then it hasn't happened yet. So we continue monitoring those consolidation levels. So as for gold, and we have mentioned, we are seeing an extension of the bearish momentum. So if I just clean my chart and I remove everything, you can see from the daily time frame, this is literally the very definition of a falling knife. So the market has made a subsequent bearish momentum. The key level target we were looking at yesterday is around this area here. And today we are seeing an extension of the bearish momentum. And after such a big move in gold, we usually expect an opposite momentum. So it hasn't happened yet. So breakout, retest, continuation. So which implies that we could be seeing some further downside momentum. So if we happen to see some further downside momentum, the key idea, as I mentioned, is a very short-term target around this area here, around 25.87. Then once we get there, we still keep observing for signs of bulls entering the market, and that hasn't happened yet. So today, on a very short-term scale, the expectation is some further downside momentum, potentially from this level down to 25.87, but then we keep observing to see if buyers are coming right back in. So for now, it's more of a clean short selling opportunity, especially now that the market is breaking this previous support area. So as for the currency side, we are seeing an extension of the bullish rally in the dollar index. So this was a Trump move, pullback, and then continuation. So dollar continuing to make new highs against the Swiss franc. So the bullish momentum here is expected to continue. Of course, we have new targets for USD Swiss franc at around 0.88813. And if you look at other currencies, they're also suffering from the dollar. For New Zealand USD, we projected some further downside momentum. So clearly we have a clean break here. So for those who like observing these consolidations so that you can take advantage of the breakout, then I would say that we have a breakout happening in New Zealand USD since yesterday's price action, which implies that we could be seeing some further downside momentum perhaps an extension of this bearish move to around 0.59308. USD CAD continues the bullish momentum. So as we had mentioned yesterday, from the daily time frame, we are looking at the market retesting the previous high, which it already did, and now we don't have candlesticks on the left, meaning that we are looking at even newer highs on USD CAD. So the most recent high was around 1.39754. This happened around October 2022. So we are looking at basically a 2-year high. So from the 1-hour chart, this is how it looks like. So potentially the market breaking and extending the rally to 1.39754. And this was the highest price in 2022. So the previous record highs have already been broken. Even if you check on the daily time frame, this is broken, this is broken, this is broken. So now an extension to 1.39754, which is within reach for today. So we expect this bullish momentum to continue for as long as the dollar continues being strong. So we had discussed quite a number of other markets. Silver, we expected a retest of the upper trend line, which happened with a shooting star, and then a drop to this area here. So this was the previous low. It played out perfectly, and then we broke this support, retested, and continued moving lower, which implies that the bearish momentum is stronger than expected. So from what we are seeing here, now the next target is all the way down, around $30.091 per troy ounce. So there's still more room for downside momentum in silver. So expect to see some further downside. So far, it's also very important to observe that there is a lower trend line that the market has been following. So the lower trend line is along these lines here, which means that our target might also be much lower. But perhaps 30 is a psychological number. So we could be seeing the bearish momentum extending to $30. So we discussed yesterday the bullish momentum in European equities. So it didn't last long. So once the market got to these areas, we saw the reversal, and now the market got to this bottom, and this is for the Spanish IBEX. For the Euro 50 cash index, it got to the target here. Notice the coincidence between the previous high on Friday and the high we got yesterday, and immediately the market went down, which implies that this market is going into a consolidation, especially when you consider that we are having this and equal highs. So for this week, we could be seeing this oscillation being the theme of the day. Theme of the week, where the market swings down and then up, down, up, down, up. And it's the same thing for the French index. So if you look at the CAC 40, it's the same thing that we are observing here. So a market that is swinging up, down, up, down, up, down. And it can be very nice if you can catch the edges. And we also had the German stock market index, which made a strong rally. Remember, we were expecting the market to hit 19,563. Didn't get to that target. Notice where we topped yesterday, and immediately the market reversed. Now we are seeing more of a market that is simply forming higher highs. But also, if you look at the lows, we are likely to get a higher low around here. So clearly, a market that, if we just objectively look at the week, a market that is slightly bullish but moving on a sideways. So European equity indices are not that bullish for this week. And now we are looking at a potential breakout on the UK stock market index, or the UK 100. So the UK 100 is likely to continue pushing lower. So from the forward chart, this is how it looks like. So breakout, retest, we tried getting back into the pattern, failed and dropped. So yesterday, we projected that the market would rally to this area here. Didn't quite get to that target. Instead, the market found resistance around this area here. So after that, we had a big drop, and now we are looking at a potential breakout towards the lower side. So from the forward chart, this is how it looks like, and from the daily, this is how it looks like, which implies that we could be seeing a big sell-off to around these areas here. And this is around 79.67 price action level. So given the strong sell-off we are seeing in European equity indices, then this might be the play for the day as the UK 100 extends the losses towards the lower side. So in terms of the trades for the day, it seems more likely that we'll be seeing an extension of the bullish momentum in Bitcoin. So this might be one of the top opportunities for the day. So for US equity indices, we don't have breakouts yet, but it seems more likely that we'll be having a breakout soon on the US 30 or the Dow Jones Industrial Average. So once the breakout is in, then we could be going for bullish positions. So it's a wait and see. But it seems that as we enter the London session, we are seeing more bulls coming back into this market. So notice how it was a strongly selling off yesterday in the afternoon, but then this morning it has not been able to break the lower trend line here. So as for gold, seems likely that we are seeing an extension of the bearish momentum. So even if you go to a much smaller time frame, the 5 minutes chart, yes, it's struggling to extend the bearish momentum. So we observe here keenly to see if sellers continue pushing the prices lower. And of course, from the 1 hour time frame, what was looking bullish is now remaining more of a tail towards the upper side, indicating a rejection of higher prices, which implies that we are likely to see the price extending further downwards to around 25.87. So US DJIA on the verge of a breakout, Australian dollar against the US dollar, further bearish momentum, pound yen about to make a turn here from the bottom that we saw on Friday, pound USD extending the bearish momentum as we speak. So this might as well be trade of the day. This is what we are seeing. And the target we discussed is 1.26759. And lastly, the Euro USD extending the bearish momentum to a previous low. So from the daily time frame, this is the likely target for Euro USD. But then we could also be seeing an extension of the bearish momentum. So let me check on the comment section to see if there is anything I might have missed. So good morning. What times do the London and New York sessions start? So this is something that has been adjusted recently. So the last Sunday but one is when we had the daylight saving time. So you can always check on Baby Pips, babypips.com, and you'll have a live view of the same. There's also an indicator of live sessions on TradingView. You just look for sessions indicator. So trying to find it here, Forex market hours, and then you'll have a live view. So just check the link I just shared on the comment section. It will show you the live sessions as they happen. So with US jobs at 12K from last month, I foresee lower CPI. So there was this storm that had happened in the US, and it disrupted the job numbers. So it was, I would say, one event that largely interrupted the job numbers. So that storm led to the different readings in the non-farm payrolls. So job numbers were just as normal. So it was only a seasonal or one-time event that caused the big disruption in the numbers. However, for CPI, given what we are seeing happening in the stock market, what's happening with Bitcoin and cryptocurrencies, then it's more likely that people have more money in their pockets and they'll be buying more stuff in the US, leading to even higher prices. So in this case, expect some form of uptick in inflation, which would likely strengthen the dollar further. What is the minimum amount to start trading Forex? There's no minimum. You can even start with $10. That's like what? Like 1,300 bob. But of course, you don't start with those small amounts. Always try to start trading with a reasonable amount. Reason being, You don't want to be a victim of your first trade. You lose your first trade and you lose your account. So the idea is to have a much bigger balance, just in case you're not lucky on your first trade, you still have more room to execute more trades and recover. So do you expect a reversal on the DXY soon enough? No, I don't have any expectation of a reversal unless there is a surprise drop in inflation tomorrow. So a key decision point will be tomorrow after the inflation data. Another good question, what is causing the rally on BTC? There was a very strong buy from spot Bitcoin ETFs throughout the year. So these guys have bought $500 billion since the year started. They have just been buying and buying and buying. And of course, Bitcoin is limited. There's only 21 million Bitcoins that will ever exist. So as long as they continue buying more and more, then at some point, there will be a supply shock, and that means much higher prices. So there's also the strong bet on Donald Trump, who promised to protect Bitcoin, self-custody Bitcoin owners, and potentially create a strategic Bitcoin reserve for the US. And that is leading to a very strong positive optimism in the markets. So that's the worst number I would believe this is ever seen. With the labor market not in a good place, I definitely expect a rate cut in the upcoming FOMC meeting. What do you think? So as I explained, there was an event that happened with the weather in the US, and those storms really affected a large number of jobs. So in that case, for the big number of people who are not working for that period, it impacted the overall non-farm payrolls, because the numbers that we get to see reported is a net number. So they report the number of new jobs created minus the number of jobs lost. So if there's a large number of jobs that were lost within that period, then it impacts the overall number, but it was not an overall trend. It's not like the US economy suddenly started losing jobs. It was a single event from the weather. So of course, Jerome Powell understands that. So we should be looking at a longer term trend, not just one individual report. So as you said, gold is on a free fall. What could reverse the momentum back to the bullish bias, considering that Trump will push for the escalation of tensions and USD might keep strengthening? So only reason we could be seeing gold making a very strong comeback is on one side, having the dollar starting to weaken. And the main reason we could be seeing the dollar weakening is as a result of inflation. So if inflation continues dropping towards target, then there will be increased bets on Fed cutting rates. And in that case, we could be seeing gold making a resurgence. But then if inflation remains significantly high in the US, then interest rates are bound to also stay high and the dollar is bound to stay strong. So that's one thing. The other thing is, of course, from technical analysis perspective, the short selling might also get some profit taking. So gold getting down 7% from the previous high. Of course, at some point, the short sellers will be taking profit. So, of course, markets don't move in a straight line. At some point, you'll be seeing a bounce. So expect that bounce to happen sooner or later. So we keep observing to see evidence on the chart that buyers are coming back in. But that hasn't happened yet. So we remain on the short selling side. So USD JPY, we have seen that the Bank of Japan is very worried that the dollar is still gaining against the yen. But then they have only threatened to intervene, but they have not intervened yet. So we continue with the overall thesis that the market continues the bullish momentum. So we observe this breakout here. Of course, the market is struggling to break above this area here. But once we break, we head straight for 154.716 as earlier discussed. How do you tell that price will reach out to a previous week high or low? and not previous day, high or low. So sometimes it's based on momentum. You can observe this momentum over time, and that leads to the next expectation of a strong move. So I'll give you an example. You can already see that USDN is struggling to break yesterday's high. But then if it breaks yesterday's high, the next most likely target is the previous high, which is last week's high, which implies that we go for 54.716. There's nothing else in between. Means that we don't have a lot of orders in between. So the next previous resistance becomes almost like a magnet. So I'm just checking to see if there's any other questions I might have left. So from Alusi Shege, I expect Bitcoin to continue with the bullish momentum. So right now we are seeing a lot of FOMO trades, fear of missing out. And in this case, a lot of investors are pushing to buy as much Bitcoin as they can. And from what we are seeing, especially on the order flow, the balances of Bitcoin on exchanges have hit a new all-time low, meaning that supply is running out. And eventually, if this supply of Bitcoin runs out of exchanges, then we expect price to explode to the upside. So it's a big, big bet that investors are capitalizing on. So we expect to see some further bullish momentum over the next 6 months, but I don't have a price target in mind. So a good question, will the de-escalation of tensions and a strong dollar deter the recovery of gold? Yes, it will. So gold has been trading on a premium, and that premium has been based on instabilities in the Middle East as well as the current Russia-Ukraine war. So if those two regions get back into peace, then in that case, that premium in gold will be removed and prices are bound to trade much lower. So yes, that's a real factor, but we also be looking at the Chinese, India, and Russia's demand for gold, because Russia is also accelerating their gold purchases and trying to see where the balance lies between the two. Could I make it in Forex by trading a single or two pairs? I don't know how to answer this. If you specialize on a single or two pairs in the market, yes, you will be good at it, and you can take advantage of the opportunities of the two pairs. But then there are times when these two pairs will not be presenting trading opportunities. So does that mean you sit on the side or you look for opportunities in other asset classes? So sometimes we look at more of being a pip hunter rather than patiently waiting for that opportunity. Sometimes it could take days or even weeks before, let's say, Euro USD gives you a trade to go for. So sometimes it's better to widen your net, and if an opportunity appears somewhere else, you also take that too. So I think that's it for the day. Is there any considerable effects of BRICS on the dollar index? No, not yet. So even if you see a lot of news about BRICS, the dollar is still the dominant currency, the global reserve currency. So yes, it's a process that might take a decade or even longer before we see the BRICS dominating a large part of the currency trade around the world. So for now, the dollar remains king. So that's why we are seeing a very strong bet on that. And now that Trump, who is pro-America, is US president, then we continue seeing more bets on a bullish dollar. So that's it for the day. Thank you very much, guys. Thank you for your time. Remember to check out the latest episode of the Bullish Banter podcast. If you don't have a trading account, make sure to check the links in the description below. And if you're watching this on X, remember to like and share the video. The links for account registration are available on the FX Pesa handle. So enjoy the rest of your trading day. As usual, check out the potential breakouts happening on the US equity indices. And as for gold today, it's more of a falling knife. You don't try to catch that. Thank you and enjoy your day.